Hello and welcome to the Rask Network. What you're about to hear and see is limited to general financial information only. Please be sure to speak to your financial planner or refer to our financial services guide available at rask.com.au/FSG before acting on the information.
G'day, welcome to the Australian Property Podcast. I'm Pete Wargent from Alan Wargent Property Buyers. I'm here with Chris Bates from the Flint Group. How's things, Chris?
Doing well, Pete. I hear over in Boston, which is much more exciting for you than me. It's a cold, wet, windy day in Sydney, but bit of overdue rain, but doing well. It's a bit bummed down, head up at the moment, going around up to the Southwest Rocks next weekend for the long weekend. So that's a long overdue break. So I'm excited for that. But yeah, been keeping busy. How about you, Pete?
Well, yes, you're right. I'm in the USA this week, in Boston. So, of course, I've been to Fenway Park today, and I bought so much merchandise for the kids, I've kind of lost track. And I reckon I must have thrown 500 pictures of the kids in the batting cages and the kiddie ballparks at Boston Common. But, yeah, it's a great country and really great fun. So good to be here, but not particularly warm here either, I must say.
Oh, there you go. I mean, lots happening in the property market, I guess, warming up in spring. Obviously, inflation figures came out this week. Negative gearing debates, rearing its head again. So, before we crack into the three news stories, what are you seeing around the traps in terms of the media?
Well, that's right. So the median market forecast for that monthly inflation indicator, so this is quite a new measure of inflation. The ABS has only sort of started running relatively recently. And economists thought that would fall to about 2.7% over the year to August. And as it turned out, they were exactly right. So that's the lowest inflation reading in 3 years now, I suppose, since August 2021. There was a lot of gnashing of teeth about the impact of subsidies, because obviously the government's energy bill relief is part of the reason that inflation came down. But even actually, if you look at the core inflation figures, they were down from 3.8 to 3.4%. So that's the lowest in 2.5 years. And obviously, Treasurer Chalmers wasn't much on the back foot. He was straight out there with a celebratory media conference. But I think when you actually look at where the inflation's still coming from, or rent inflation was still pretty hot over the year. But I think in the real world, those price pressures have kind of gone now for the time being. And also, new dwelling costs and things like that. But I think there was, a fair chunk of the inflation was actually sin taxes on alcohol and tobacco, which I guess you could argue you could probably exclude from the figures anyway. And I think anyway, even just despite that, in September, you'd have noticed fuel prices falling quite a lot further. So I think with the base effect next month, we could be down to nearer 2. So overall, pretty good news, you would say.
Yeah, and I think that's the story, right? The numbers haven't surprised to the upside. They've, kind of come in line with expectations, and, putting that inflation genie back in the bottle is, and that sort of soft landing. Do you think we're heading in that way, Pete? Because, it's been pretty dire over the last few years, but this is usually the fear of crises, and whether they actually happen, that sort of correlation isn't really there. I mean, everything from the Euro debt crisis to it could create a whole list, Trump, Brexit, etc. So, do you think we've actually manufactured this dream scenario where we've got inflation down and we haven't crashed the economy and put it into a huge recession or created a huge amount of defaults in the housing market?
I think when you actually look over recent years, even the past decade, or even if you went back to 2007, the number of things which you would have thought that the Australian housing market would have really struggled with, global financial crisis. Then we had the Banking Royal Commission, and lenders were too scared to write loans for a period of time. And then we've had the lockdowns. And the number of times we've seen things which looked like they could be doomsday scenarios. And although some markets have come under pressure, overall at the macro level, it's all just been overridden, I suppose. Strong population growth. The economic model in Australia seems to work pretty well. And it looks like, once again, we're probably going to come out the other side. Defaults and mortgage arrears, they're obviously off the lows and they're rising, but nothing catastrophic at this stage. And, there's plenty of firepower up the sleeve, I suppose, for the Reserve Bank if they need to cut interest rates quickly. And I think one of the advantages, I guess, of the system in Australia is that most people are on variable rate mortgages, or at least short-term fixed rates. So a cut in the interest rate can quickly change the sentiment. I think it's a bit different in some other countries. So I'd argue that's probably a strength rather than a weakness for the Aussie system and for systemic risk. So, yeah, I mean, you don't want to tempt fate with this stuff, but it does look overall as though we're sort of coming out the other side of the mortgage stress, and market pricing for the next 18 months sees the cash rate target back to 3%. So quite a lot of easing to come, I guess, over the next year and a half.
Yeah, and I mean, I guess the RBA didn't cut rates this week, but I mean, they're getting closer and closer to a cut, it looks like. I mean, it sounds like it's a quarter chance, 25% chance that it'll happen at the next meeting. But even if it doesn't happen, it doesn't mean that it's just probably, I guess, accruing the rate cuts. Now, they're going to have cut harder and faster. And so, I mean, you're looking out to December next year, we're looking at maybe even a 1.25% of cuts, even up to 1.5 if you go into, mid-2026. And so that's a 15% increase in borrowing capacity. And I do think, when one of the stories we're going to talk about today is housing affordability, and there's going to be a pressure to APRA to step in also to increase borrowing capacity and let actual new entrants to the market. So, yeah, it's interesting where we're at in this cycle, and we're already at late September, it's not going to be long till it's late October, and the market starts to die when you start getting into November. So it's already a month into spring, Pete. How are you seeing buying up in Brisbane and the general market up there? Is it a bit patchy, or is it a lot of FOMO building?
It's pretty solid. I think some buyers have found that it's difficult to make their cash flow work sometimes. I think particularly investors. So people having to pull a few more levers to make things work. For example, buying stuff that's a bit more modern to get depreciation benefits, or using a bigger deposit, or in some cases, people in the market are just looking forward to some monetary easing to ease that negative carry. I think there's just a bit of chat this week about potential tax changes. This seems to come around every year, or at least every election cycle. And the media stories go something like this. Media conference, somebody asks the Prime Minister, are you ruling out any changes to negative gearing and capital gains tax at the next election? And the Prime Minister comes back and says, well, we haven't done any work on it. We're not really looking at it, but we're not ruling anything out or in. And then that's the media story for the whole week. It's like Albanese refuses to rule out negative gearing, and it's all over the media this week. But that does, the second order effect of that is that it does impact people's thought processes, because they don't want to walk into a housing market that's suddenly going to get sideswiped by a change in the tax regime. It feels to me like negative gearing is not the main game, I suppose, when it comes to property price performance. And I saw the Housing Industry Association, Tim Reardon, said this week, you can't make housing cheaper by taxing it more. Ultimately, if you're going to bring prices down, they would need to think about slowing immigration, freeing up supply, planning rules and things like that. Just whacking more taxes on investors, it might make a short-term difference in some markets, but it would probably manifest itself in higher rental yields one way or another. So, yeah, look, that's having a bit of an impact. There's a lot of chat in the WhatsApp groups about potential changes of the next election. But, of course, Labour got wiped out last time they tried to bring that to the table. So I'm not so sure they'd be keen to run with it as an election point. But maybe there's some pressure coming from the Green Party, potentially.
Oh, it's one of those stories that absolutely is quite emotive, right? And news like this absolutely sells newspapers and clicks online. And you can already see, that came out a couple of days ago. Bang, it's on every single industry body's come in defence. The AFR's got like 5 different articles on it. The SMH is on it. Look, a lot of people are coming from self-interest, obviously, right? But there's also a huge amount of what we believe that the government doesn't understand, of the unintended consequences of making a change like this. And you change the incentive, you change people's behaviour, you change the way that they approach things, and it will absolutely change market dynamics, which you might think are great news, right? If you're a first-time buyer and you want to enter into an area where there's a lot of investors own property, okay, maybe this could really work for you. But if you're a sort of in an owner-occupier area, well, if you change negative gearing, does it really create a lot more rental properties on the market? Probably not. A lot of the investors in those areas have owned properties for a long time. They're probably neutrally or positively gear. So it probably doesn't increase supply for you. And if anything, people with homes will say, well, I could buy an investment property, but I'm going to have to pay higher capital gains tax. Can't get negative gearing. Okay, I've still got $1 million borrowing capacity left over. Why don't I upgrade my home where I can get tax-free growth? And what you will see is more owner-occupier demand. So that could actually be the opposite of what people think. They get less listings or just the same amount of listings and actually increase owner-occupier demand for people to upgrade and increase first home buyers. So, yeah, and that's just one of the unintended consequences that I think you'll see when you make big changes like this. Not to say that they shouldn't be made. I'm just saying that the old second and third tier, decisions that it affects, I think they need to think through a bit more. And rental supply is one of those things. Absolutely, if you start to really cut mum and dads and first-time investors out of the market who need those negative gearing things to cash flow benefit to actually afford the cash flows, then you're absolutely going to change rental supply. And do you really want that? Well, you've already got a lot of investors bailing and a lot of new investors not replacing the current investors in the market where they own properties. You're absolutely creating investors in the market, but they're not where the old investors were. And so that means you can't look at aggregate data. You got to look at suburbs and cities data to show where rental supply is changing. And you change negative gearing, you'll only, I think, change that further.
Well, it was probably an off-the-cuff comment, but Albo did say they haven't really done any modelling on the impacts on supply. And I suppose this was the debate last time around. People say, well, if investors aren't coming into the market, that will kill new housing supply. Labour sort of said, well, okay, we'll quarantine negative gearing benefits to people who invest in new properties, which sounds good on the face of it, but then ultimately, who's going to buy an off-the-plan unit at a premium price with just for the tax benefits? Because when you come to sell, who are you going to sell it to? The next investor doesn't have the benefits, and then you create this two-tier market. And yeah, I guess whenever you have different rules for different buyers, it does create, as you said, there's this kind of a second-order effect on what happens in the market. And there's enough uncertainty as there is for developers. So, yeah, look, my gut feel is it won't get taken to the election. But as usual, watch this space, I suppose.
Do you think the migration story is going to be another key thing? I mean, they have done some changes to that to sort of ease the pressure on them to do something. But do you think that's going to be a big election discussion next year together with housing?
Oh, bound to be. It's an easy wedge for the coalition, isn't it? We'll cut immigration. Labour Party will need to be seen to be doing something. They've already made some changes, actually, to international student visa applications, and that will take a bit of time to flow through. In fact, you would think that actually year on year, the net migration figures will normalise, but it's taking quite a long time. And if you look at the monthly figures, it's not really coming down quick enough for the liking of a lot of media commentators. So, yeah, it's definitely going to be a key election issue, and not just in Australia. This is going to be an election issue or a political issue all across Europe, US, Canada, New Zealand. So it's a pretty hot topic at the moment because a lot of developed countries are trying to tackle their population pyramid pressures by, really, it's mass immigration, and it's not popular with everybody, of course. It's popular with business, but from sort of a livability perspective, it's creating a lot of challenges. So, yeah, I've no doubt that'll be a key election issue. So should we crack on with these top three news stories of the week? So the first one that caught the eye from Proptrack, a very interesting media release. So housing affordability has obviously deteriorated through the pandemic. And in fact, with higher mortgage rates, it's become increasingly difficult for people on a median income to buy a median-priced house. So obviously, property prices went up when interest rates went to zero, but they've never really come back down. And it feels like something probably has to give. Either we have lower mortgage rates or higher incomes, or prices have to come down. But affordability at the moment is, well, it's as stretched as it's ever been, effectively. Housing affordability at its worst level on record. And there's a whole range of stats provided about what a median income household can afford. You know, the number of houses is like 14% of homes sold. I always, you've pointed out enough times that if you look across the market, the level of gearing is actually very low. It's like between 20 and 25% typically. But at the margin, of course, for the first home buyer, for the upgrader, there's a lot of pressures there and affordability challenges. Mortgage costs have really steepled over the past 18 months, and the average income household is probably now looking at spending a third of their income and then some on mortgage repayments just to buy a median price property. So, yeah, it feels like something's got to give on that side of things. What do you reckon?
Oh, I did read this report. I'm actually interviewing Cameron this afternoon, which is going to be interesting, but for the elephant. But, I mean, I think the interesting thing on this report is like the median and the top quartile sort of incomes and the top 25 and the top, I think it was the 10% incomes as well. But you could really see that, it's really unaffordable for, anyone on medium and lower incomes, right? And I think the property market's gone to a stage where it's haves and have-nots. But I think the problem is there's a lot of people who are in the haves camp, right? And a lot of people who've got wealth in their parents and their grandparents. And that wealth, particularly in that generation, is huge, right? And it's getting passed down to kids and grandkids, which is, and then they're re-leveraging it. So they're not going in with a 20% deposit. They're going in with a huge amount, which is allowing them to buy. And so that's not really a solution long-term, I feel, for, Australia as a whole. And it's, only going to make inequality worse. And the longer that we kick that can down the road means the longer that you create the haves just getting more money and the have-nots not. But I think this will play into the conversation with AFRA stepping in and increasing borrowing capacities, because this will be a tool that people without much cash can do. I think you also see that the 5% deposit schemes and bank innovation around no LMI products will be more relaxed. I think that's another tool to help first home buyers enter the market with smaller deposits. So hopefully, if you see borrowing capacities go up and deposit hurdles increase, I also think that, maybe there's an argument that first home buyers in particular, get more stamp duty savings, right? So if you can really cut the time to save a deposit, I think that's good. I also think this will lead into the Liberal Party arguing that, hey, why have a lot of money in retirement in your super funds when you don't own a home? And are we better to allow people to access their super for their first property than let them leave that in super, and spend it when they're in retirement? And there's a lot of research that sort of does back that as well, which they'll be using to show that you're actually much safer and more secure when you're in your 50s if you own a home versus if you don't. And it's less pressure on the government, to be honest. So, I can see all these sort of things popping out off these type of reports. But if you change interest rates, I do think you change affordability, and you can really see in that report that some cities around the country, particularly like Hobart, for example, it's really had a good run, but it also shows places like Perth. Maybe there's a bit of, even under higher interest rates, there's a bit to run in that market. And if interest rates got cut, maybe that could really extend the run when you look at it compared to, say, Sydney, Melbourne and Brisbane. What was your take when reading that report?
Supply is pretty short, isn't it? That super for housing question is going to be another interesting election piece, because obviously the coalition is looking for ways to differentiate itself. I think funny thing, isn't it? Because super was set up to tackle the pension problem, and overall, certainly compared to a lot of other countries, it's been very successful. The thing that's kind of unusual about it is we've got this sort of mandatory superannuation contribution that goes in. A lot of people go up to the concessional cap, but then there's a strange thing about when you get into that middle stage of life and you've got maybe a couple of kids and then you've got school fees to think about, and then your mortgage rate goes up, but you can't actually access the super just at the time of life when you actually really need it. He's got, well, you can't. It's locked away till he's 60 plus. And a lot of people would say, just taking the emotional side of the argument out of it, why can't people use their super? It's their money. But I imagine if this gets taken to an election, there's going to be a huge amount of pushback from the superannuation lobbies. There's a lot of, it's a multi-trillion-dollar industry, so I'm not so sure they'll get it across the line. But I guess interesting when you look at the Proptrack report, it's obviously become very difficult for renters to save because rents have gone up. The time to save a deposit has blown out. But strangely, the number of first-time buyers hasn't fallen at all. In fact, it's been rising, I guess, for two reasons. Firstly, government subsidies. And secondly, as you mentioned, intergenerational wealth. A lot of parents and even grandparents are saying, well, this sucks to be in the rental market at the moment. Here's a deposit and off you go, which is great if you're a trust fund kid or you've got wealthy parents. But for new arrivals to Australia or people without the financial backing from a family, not so good. So it does create a bit of an us and them situation. Increasingly so, I think it's one of the hardest things. You could be somebody who scrapes together a deposit and it might take 5 years or however long it takes. And then somebody in the exact same cohort as you just gets gifted $1 million from a parent and off they go. And you just have no sort of real way of knowing whether the playing field is level. And that's very difficult for young people. So definitely an emotive issue and an increasingly a big issue for Australia as wealth inequality increases.
Yeah, absolutely. I think that, I think that the conversation around affordability is not going to go away. And I do think it's just going to get worse over the coming years. If you increase, basically increase the rentals crisis, I think that's been one of the things that's supported prices in the last couple of years under higher interest rates. Because if we had a really fluid, easy to access, you could get everything you need from a rental market, that pressure to buy is reduced. And if you increase pressure where, hey, I understand, I can't really rent, whether I'm a single couple, family, downsize and I don't want to, then you're forcing people to enter the market to be buyers. And I think that's one of those unintended consequences is the more that we target, investors are the bad guy here, all you're doing is pushing more and more owner-occupier demand in a market that's already heavily driven by owner-occupier demand. And so I can see that playing out. Should we move on to story number 2, Pete?
Yeah, definitely. So the Fin Review did a piece, buyer's market has arrived, but it may not last long. So auction clearance rates were the second lowest point this year at the weekend just gone. Obviously, higher mortgage rates have smoked some more sellers out into the market. Maybe there's some opportunities for buyers out there. But as you said, it's only really, it's probably 8 more weeks and then we're into December. And then, it's kind of the silly season and then the auction market starts winding down for Christmas anyway. So, look, there could be a window of opportunity for buyers here, particularly in Melbourne, it seems, and maybe to some degree in Sydney as well. CoreLogic had for last weekend 68% combined auction clearance rate, which was the lowest since the King's birthday long weekend, which is way back in June. And Louis Christopher at SQM has been doing quite a bit of analysis on the validity, I suppose, or veracity of auction clearance rates, and he tends to think they're overstated. But yeah, he said that maybe we've got a slight buyer's market here and sellers are becoming a bit more negotiable. As you said, it's not really that long until Christmas comes around, and by the new year, we'll be talking about interest rate cuts, and that could probably give the cycle a second wind. So, what are you saying? Are you getting any sort of feedback from clients about markets being a bit easier to buy into potentially?
Oh, it's funny. I did have a client a couple of weeks ago who's buying a house in the inner west on the higher end. Sort of said that he's got a lot more choice and he's seeing a lot more come on. But I do think that was just a couple of weeks where it made a lot of sense for school holidays, and the listings did really jump. And I think people always get excited when that happens. I do. I go, hang on, I say, oh wow, 12 new listings in the search area. Okay, let's have a look at this. And you go through and you look at the quality and you go, oh, there's nothing really that good coming on, right? And I think that's what a lot of buyers are seeing is that, oh yeah, there's more on the market. Is it the great stuff? Probably not. Have I got more choice for the poor stuff? Yes. Okay. Well, do I want to buy it? Probably not under higher interest rates. And so I think you're going to see a multi-speed market where, all the buyers flock like a seagull effect to that one chip, that one property. And that goes under competition. It goes fast. And buyers are a little bit, fall for this, I think. I've seen it over the years where they go, oh, more listings at spring. I'm just going to be a bit patient. And bang, the weeks tick over. And all of a sudden, like we said before, it gets to November. It's like, I'm really stressed now. And then you see a lot of the poor stuff get off the market coming into Christmas. It's kind of like a clear out. If you look at SQM data, you can always see that, around that December time, a lot of the older listings get snapped up as people get desperate. So I do think there's the buyers are still cautious, but I do think they're keen to make a deal happen. And we've seen a number of clients come out of the woodwork, both investors, upgraders, first-time buyers come back in over the last month or so when the confidence around rates increased and the expectation that rate cuts aren't far away. A lot of people want to get in before that because they know, when the psychological effect is when the RBA cuts, it'll be over all the news channels. We're now in this new cycle of lower rates coming. And, a lot of buyers will be waiting for that moment. And then all of a sudden, that first open home on that first weekend, busier, FOMO kicks in, and people are trying to get ahead of that. But I'd argue that there's already the herd looking at those properties. But you can still probably get the medium and average properties pretty easily, I would say.
It's interesting, isn't it? When I look at the stats for Brisbane, if you look at the old stock listed 180 days plus, it's the lowest it's ever been. There's virtually nothing. There's under 2,000 listings, well under 2,000 listings. Now, if you went back to the Banking World Commission, there was about 10,000 properties listed for longer than 6 months. And if you look, maybe Sydney and Melbourne have just seen an increase. So if you were to look nationally, probably there is just a bit more old stock on the market and listings are a bit higher, but it's still, still way, way down on where things were 5 or 10 years ago. So look, there probably is a bit of a window between now and Christmas, especially if you're buying in Melbourne or Sydney to some extent, to find a slightly more willing seller. Because I think there are people in the market who are struggling with cash flow and they'd love to just tap out before the Christmas break comes around and people are starting to worry about other things. So there could be a bit of a window there, but certainly Louis' view is that we've still got population growth running at 600,000. We're still building at about 40,000 properties a quarter. So there's still a mismatch in the market, and that hasn't really been addressed. And there's more listings than was the case, but it's still overall pretty tight. And as you said, I think what we're finding is, there's listings, but you really have to pick through them to find the good stuff. And there's plenty of pretty ordinary stuff listed on the market that makes life pretty difficult.
Yeah, and as we've already said on this podcast, lots of times the work from home sort of trend, we are seeing people suck to the capital cities more and more and heading more towards buying bigger apartments than, bigger, older houses in the outer suburbs or moving, 1 or 2 hours from the city. And we're also seeing, a big, strong portion of the medium and the lower end of the market still, transacting, right? So I don't think there's this real, traction happening in the 1-2 plus range. I think there's still a lot of the sales and the listings in the sort of the smaller properties. It makes sense when people only list their more expensive properties when they're keen to go and buy something else, right? They might be, there's always natural people, dying or going through divorces or, going into aged care or, having to sell because they want to downsize, etc. So there's always a natural part of the market that's coming on there. But when you see a lot of listings in the upper end is when, people are transacting, they're moving, they, are switching cities, they're upgrading, they're buying bigger properties, etc. So, but I don't think that market's really going to turn over that much. Even when rates start coming down, the jumps are just too big to make, unless you're super confident about your, financial position, whether it's inheritance is coming or you're doing really well at work. And I think that turnover rate and people stuck in their homes and renovating their homes is the way of the direction of the future, rather than people just switching houses, every 7 years. It's going to be more like, we're going to live here 15, 20, and we may only live in 3 houses, not 6 houses over the next 60 years.
It definitely is. It's not just an Australia thing. In fact, just to throw in an anecdote or two, because I'm in the US, well, firstly, the coffee's rubbish, but that was a given. But as I was on the way to Fenway today, a fella pointed out Tom Brady's first home that he bought when he got his first contract way back in the day. And it was a single family home, which is what in Australia we just call like a terrace, I suppose. Sold it for 13.8 million a decade ago. And he said, well, he can double that today. And when you actually put that into Aussie dollars, you're talking, what's that, 35 million? These are big numbers. And that's Boston. And next week, I'm in Los Angeles, where you can find homes that are listed for 200 billion, And with the way interest rates are heading in the US, well, people are now starting to report mortgage rates with a 4 handle in front of them. So although there's been some pressure globally on housing markets with interest rates having gone up, there's been no slowdown in housing prices. Record highs in nominal terms for the US, same for Australia. New Zealand is one standout, I guess, where the interest rates have really broken the market there and prices have really come off the highs. But Australia is just holding together. But it's not just an Australia issue. There's not many countries around the world where you'd say housing's become much more affordable. and there's plenty where it's just gone up and up. So anyway, third article and final one for this week. So again, from the Fin Review, report from Urbis, apartments are taking, basically 2.5 years longer to deliver than is normally the case. So it's now taking 75 months for apartment projects to be delivered. 5 years ago, the comparable figure was 45 months, and they said that's due to higher costs, labour shortages. Master Builders Australia suggests that we'll probably do well to get to 1 million homes over 5 years, which is way less than the government's target of 1.2 million. And yeah, interesting, just digging into some of the stats. They reported that in Queensland, new premium units are selling pretty well, which is something we've talked about actually on this podcast before. But in Melbourne and Sydney, it's only really, they're saying some of the more affordable new stock is being bought up, but it's pretty difficult for the average project to get across the line, and the supply is just taking years and years. And that's probably the last thing that's needed at the moment in Sydney and Melbourne, given record population growth. But 75 months from approval to actually seeing a unit that somebody could actually live in, it's a very long time between drinks. So I guess that suggests that supply should pick up eventually when interest rates come down, but it could certainly take a while. What do you think?
Oh, I do think this article was quite interesting, actually, because, we've spoken a lot about this, that the only feasibility where developments can get up, right, is on the higher end of the market. But when I was reading this article, I was quite surprised. It was saying that, the more affordable parts of the market are actually, doing quite well in Sydney. And I thought that's quite interesting. It was saying a lot of the, infrastructure, particularly in Western Sydney, you've got the metro, they've got the airport, you've got the Southwest Metro that's now live. Maybe that's created, some good opportunities where developers got in early. I do have clients that, sold, houses, 5+ million out west, where they, were around the airport and the blocks that, typically weren't great for residential, or there was just a, land banking basically, and all of a sudden they could sell them. And so, maybe that's what's happening out there. I haven't probably spent too much time going around and having a look at what's been selling from the, the high density and the apartments, etc. But that was quite a surprise that, they can actually make these stack up even under high building costs. You'd have to keep them affordable. You have to get that land, really cheap. And whether you can still buy that land really cheap, or whether it was developers who land banked in the past. But, if you're making your money in land growth, then how much are you actually making in the whole effort to do the construction? And so I think that's an interesting thing when, you land bank and you end up selling it when the land is really hot and the margins are really tight for developers. Are you just going to make a lot of that growth without actually, and, maybe you get a DA approval in the meantime as well. But, how much do you actually make in the build is a key discussion when you're talking about this stuff as well, because a lot of people make most of their money just in the land going up, not so much the build.
I think you're right. When you actually look at the stats, there's a couple of interesting things that jump out here. Firstly, investors are certainly active in Perth and on the Gold Coast. Probably about half of new units being bought in those markets are investors, and that's it looked like there was a couple of big projects in Perth getting up, which kind of tilted the numbers. But if you look at Sydney and Melbourne and inner city Brisbane, it's really owner-occupiers that are doing all the buying, about 80%, way higher than normal. And the Sydney project, it's Western Sydney. And if you read what Urbis have reported, well, it's really been facilitated by more infrastructure built way out west, where there's now an opportunity to deliver affordable apartments with better connectivity. So as you said, it's probably a lot of cases where land has been owned for a long time. Nobody ever really wanted apartments in outer Western Sydney, but now there's a potential to deliver the project. But the flip side to this is there's not really much being delivered in the inner west or lower North Shore, eastern suburbs, northern beaches. There's all these markets where we really do need that missing middle, the townhouses, duplexes, boutique apartment blocks. They're just not getting up. If you look at the sort of high level numbers, the supply is dismal. So yeah, look, it will turn around eventually, but at the moment, certainly in the inflation figures, new dwelling costs, they might have slowed, but they haven't come down. So It's not going to be something that turns around quickly or on a dime. It's going to take time, I guess.
Yeah, I think it's and just taking that long time to get things through planning, and maybe that's just been dragged out because a lot of the averages have been increased because a lot of the planning was based on old building numbers, right? Like I was, if I was going to do this development, my building cost is 500 million. Well, if that's now 750 million to do the development, there goes my profit, right? And I can't sell them for more because people borrowing capacities are tight, and so I'm just going to kill that and keep that up or sell it. But no one really wants to buy it at the moment because they can't make money on it either under current land prices. So you just see this freezing up of opportunities around the country that have to wait until the numbers stack up. Either building prices come down, which it seems a little bit unlikely, to be honest. I think that there's no shortage of demand around the world for materials, right? And labor, to be honest, everything from, the commercial infrastructure to the housing. And so I don't see that slowing up, Pete, unless you do. But so I can't see that dropping too much. So all you can really need to happen for these projects to get up is people be able to borrow more money. Well, I think that could easily happen over the next 2 or 3 years. I could see a 20-30% increase in borrowing capacity with significant rate cuts, APRA stepping in, bank innovation, etc., wage increases. But I also think that will also lead to high prices. I think the reason the market is going up, but there's a handbrake on there. That handbrake will absolutely be released when borrowing capacity goes up, rates get cut, and intergenerational wealth all combine under absolutely low listings to, what push affordability, I think, past what people think's affordable today. Your story around the US and, the prices of properties, absolutely. You can go around the world and you go, wow, actually, Australian housing looks cheap compared to this. And there's lots of pockets around the world where you go, I know Sydney as a whole is like one of the most expensive cities in the world. But if you look at certain pockets, you go, well, there's no way in the world you'd be able to buy the house that you can get in Sydney for that same dollar value in other areas. Is that your sort of take, Pete, when you look at what we buy in Australia, particularly at the top end? You actually get, decent blocks of land, bigger houses, but, that's not what you get in other countries around the world.
If you look at a 3-bedroom unit in Melbourne, and especially if you think where the Aussie dollar is today, it's pretty good value. There's not many cities of a comparable size where you'd say, yeah, actually I could get something for a decent value. I'm going to one of them later in the year in Kuala Lumpur. That's probably one of the places in the world where real estate is cheap comparatively. But then if you go to Hong Kong or Singapore or any of these big cities like New York, you just don't get the same value. So yeah, it does kind of depend on the exchange rate, and it depends on what you're buying and where. But it was interesting just in those Urbis figures because the new apartments in Brisbane, it's only really the luxury stuff that's getting up, and the weighted average sale price in the quarter was 2 million for the first time. So yeah, it kind of, yes, it depends really where you're playing in the market, and you see these comparisons between countries and cities, but yeah, the headlines tell one story, but you really need to drill into the figures to sort of get a real read on it. So yeah, there's plenty going on. I guess the good news this week is inflation's to some extent back in the bottle now. So I guess with fuel prices coming down in September as well, and we've got the base effect helping, I think the inflation story is probably a good one for the next few months, and that'll be a big relief for the government, and they'll be positioning for a good news story in the lead up to a rapidly looming election. It's amazing how quickly these things come around in Australia. So it feels like you've only just got the last election out of the way, and people are worrying about the next one. So what are your plans for the weekend, Chris?
Oh, a 5th birthday party. My wife's studying psychology, so I've got to support her with an assignment. And she's got due on Sunday night, so doing that. But obviously going away up Southwest Rocks the following weekend. I just think that, got to be careful here at this time of year. I think if you're in the market looking to buy, I think, school holidays, and I think this time can easily evaporate from, people's, and, once you start seeing all the grand finals in the footy and, people start thinking about Christmas, all of a sudden the market can move. And I do think you're going to see surprises in the growth. I think that downward trend in prices could easily see a little bit of an uptick. And that's a really good warning sign that, buyers are actually, there's a bit more, stampede by buyers. They're a bit more active and a bit more urgency. And we as mortgage brokers absolutely are seeing that. So, if you are in the market and, it's going to be hard to sort of enter now. I think it takes a while to buy. You've got to get your reference points, got to know what's value. You've got to figure out what's actually suited to you as a buyer. You've got to learn. It's like the game of hard knocks. You have to sort of, get taught a few lessons from real estate agents that they're not selling you the truth, etc. Miss out on a few properties where you realize maybe you should have been a bit faster in your offers, etc. So it's really hard for new buyers to enter. But if you're in the market now, just be careful. Just letting the good ones slip would be my call, because if we do get to that Christmas period, it's a long time between November and February when new listings come. And we've seen it time and time again, Pete, you have too, where the market comes out way stronger than you expect because, there's a lot of new energy in the market because there's a lot of new buyers and there's a lot of buyers that missed, who didn't transact prior to Christmas, that are extra hungry to get a deal done. And you can see that Feb market really spring. Is that what you think, Pete, can happen if news becomes much more positive than negative?
Oh, I think so, yeah. I think if interest rates start falling, then that's a different dynamic, even from a Reserve Bank with interest rates on hold, talking about the potential for more hikes. But if people start seeing cuts and the potential for more cuts, and the US is looking at maybe 200 basis points of cuts, I think that is a risk when you've got low supply, because as we always say, demand can change a lot more quickly than supply can, and that can catch people off guard. So, get your ducks in a row if you're thinking about making a purchase, and maybe don't take too long a Christmas break, because sometimes that's the time when transactions can happen. Yes, interesting. You mentioned the AFL. Of course, I booked my US trip when the Lions were like 12th in the ladder or something, and they've somehow made the grand final. So, yes, the kickoff time here is about midnight, I think, in Massachusetts. But, I should just give a quick shout out to Stuart Weems from Pro Solution, who assured me on social media that Geelong Cats will be in the grand final this year. So maybe has to go back and just have a careful look at his statistics there, because it doesn't seem to have played out as promised. So next week I'll be in LA for my sins. So you'll be graced with the presence of Owen Rask with Chris next week, and I'm taking a week off. So you'll be spared me talking grand final next week. So have a fantastic weekend. Don't forget you can join us at the Rask Community Forum. That's community.rask.com.au. Got questions or comments, or just want to connect and have a chat, it's a great place and a great resource. So, Chris, have a wicked weekend and look forward to seeing you in a fortnight.
Absolutely, Pete. Enjoy your break, and I'll chat to you in a couple of weeks. Thanks for listening, everyone. Happy Sunday. Talk soon.
Cheers.
Thanks for watching this video on the Rask Network. While you're here, don't forget to like and subscribe so you can get videos each and every day on business, finance, investing, and so much more.